When you hear the word investing, people think you have to be rich to become an investor. So what I want to do is I want to break down my CAPL+DR strategy for beginners. The key is understanding how money actually works. You can actually do CAPL+DR with $1, $10, $100, $100 million. That's the biggest thing that we need to understand. The truth is, only 10% of the population within America owns most of the equities or most of the market. So when you hear people getting affected by the stock market or the news talking about the stock market collapsing, it's about 10% of the population that's affected. The fact is, the middle class and the working class are just trying to survive. So my whole goal is to help you understand why are you just trying to survive, how the system works. And as we go along in our education videos, I'm going to teach you what the system actually is. So the first thing that I want to teach you is what income is and what it is not. Okay? So a job is something that you have to trade time for money. Okay? Now the only way you can make more money is to give up more time. So when you do a job, you get paid an income. Okay? Now this income is actually debt. That's really important to understand. Now why is it debt? It's because we have more debt than income. We have 120% debt to income ratio in America. So every dollar you get is someone else's debt. And the funny thing is when people say, we should pay off all the debt. Well, guess what? The system would completely collapse because we're monetary debt slaves. So when you start to understand that your job, which you trade time for money for, is debt, you start to think differently. That's why I invented CAPL+DR. It's not an investment, it's a system to teach you how to move your income into things that create cash flow, that can appreciate over time, then to protect and how to properly leverage. So the first thing we want to understand is the difference between income and cash flow. Okay, let me explain that really quickly. So income and cash flow, very big difference. Okay, write this down if you're watching this video. Get your pen and paper out. Okay, so income, you need time. Okay, simple. You have to give up more time. And if you're trading time for income, you're going to work until you die. Okay, cash flow doesn't require time. You make money while you sleep. Like, damn, how do we do that? Is it magic? No, it's a system. This is how the wealthy operate. So what I do, even if you had $10, let's just use it $10, okay? And it's all about compounding. So what we do, let's talk the reality though. What we do in America is we get paid for trading time. We get paid in someone else's debt. In America, we teach our children to spend, then save. We should be saving, then spending. So read the book, Richest Man in Babylon, and this will make a lot of sense. Okay, let's say we have 10 bucks, okay? So you get paid 10 bucks. What you should do is take 10%, okay? So you would take 10%, which would be $1, okay? And you can run it into the system. Now I'm using these low numbers just to give an example. You can do this with $100 million, $1, 50 cents. The point is to take 10% and turn it into cash flow. Okay, so now this dollar goes to work. So think about that. You take income, okay, you take 10% and you put that soldier to work. Warren Buffett calls them soldiers. So now that soldier goes to work in cash flow. What's an example of cash flow? Okay, eat dividends, dividend stocks, one of my favorite. Okay. I'll give you an example, not financial advice, but I'll give you an example. STRC is a new innovative dividend stock coming up, which is a preferred stock, which is based on MicroStrategies, right? They're giving a variable of about 9 to 11%. So I want to explain, what does that mean? Okay. So say I take that dollar into cash flow and I buy I'm not financial advice, I'm just giving you an example. You put that into STRC. So now this dollar is now making 9 to 11%. And guess what you don't have to do? You don't have to trade time for that dollar. Isn't that cool? Okay, so you got paid 10 bucks, you took $1, you put it into a dividend stock, and now you're making 9 to 11% off of that dollar. Okay, so that's the first move. Okay, now outside of the 10%, what I do is outside of my debts and non-negotiables, let's just say, okay, let's go over here, and let's say out of the $10, okay, I take 10%. Which is $1, and I buy some cash flow. Okay. Now, let's say we have some money left over outside of our bills, right? Our debts and non-negotiables, that's what we call them. Let's say we have $3 left over after we pay our bills. What we can do is we can take that $3 and we can move it into appreciating assets. that beat inflation. And I'll do another video on inflation and teach you how inflation actually works, okay? So I use assets that actually beat inflation, okay? So we have two components happening here. Now our $10, okay, instead of buying stuff that makes us poor, we take $1 and we gain, this is just an example, not financial advice. You turn the dollar into, now it's working for you while you sleep into 9 to 11%. You take the other $3, okay, that's outside your debts and non-negotiables, and you put it in an asset that eventually over time can go up in value, okay? So now you got two components working for you. Okay, you got cash flow rocking, you got some appreciating assets, and that could be a short-term or long-term strategy. Okay, now these assets go up right here, the appreciation goes up, and what we do is we take profits on the way up, and then we start building our flywheel, and then we start developing protection. What are protection? Things like cash value life insurance, precious metals. I like Berkshire. Okay, now what I'm doing is I'm creating a protection component. Now remember, that $1 is becoming 9 to 11%, creating cash flow. That cash flow from that dollar goes into appreciating assets. We got the $3 outside of debts and non-negotiables going to appreciating assets. Now we profit and we move it into things that we can leverage, like insurance. Okay, so now $1 is starting to transfer through the system and become multiple dollars. Okay, then we have insurance. I spelled that wrong. Sorry, we go insurance, okay? Now insurance, I can leverage right here. Now when I leverage from the insurance, this $1 has gone to work in 4 different ways. I leverage from the insurance at 5% using the family bank, and guess what I do? I go buy more cash flow, and I go buy more assets. And along the way, I'm de-risking, 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 okay? So what I'm trying to teach and what I'm working to teach and educate people on is that you don't need a lot of money. You need to understand how money works and to compound it. So I started with losing everything in 2020, and I finally got fed up and I invented CAPL+DR. So here's how mine works, okay? So let's say I'm paid $10,000 from one of my companies on a Monday, okay? That's $10,000 in debt. I take 10% and I buy dividend stocks. Okay, now, because I run lean and mean, my income from being a CEO of my companies, all my debts are already paid for, debts and non-negotiables. And what I mean by debts and non-negotiables, I run lean and mean on the personal side. This is like home, insurance, things like that, okay? So all this $10,000 is investable because it just took time once I got to that, okay? So that's 10%, okay? We got 10% of the $10,000, okay, which would be $1,000, okay, goes into dividend stocks. Okay, now I have $9,000 left over. I look out in the market. I'm like, am I going to go into things like, for me, Xrp, BTC? Okay. Am I going to buy some more silver? Okay. It could be copper. What I'm doing is I'm taking this 10,000, which is debt, and I'm transmuting it into fixed supply assets. I'm transmuting it into dividends that make cash. And then I'm just repeating the process. So I just wanted to bring you back to this example for beginners, because if you start, especially young men and women watching this, if you start at a young age and you start doing this, my daughter does this. So Raven operates in CAPL+DR. So every single time she gets to invest 30% of her income, she dollar costs every single day, and she's building this flywheel, okay? So I just want to show you that's exactly what we need to do. Anytime we get paid, let's recap, okay? Income is from a job. And there's nothing wrong with having a job. Okay, income, we get paid in debt, which is the US dollar. Sorry, let me take that down real quick. We get paid in debt, which is, and I'll explain that in another video. Okay, we're trading time for debt. We take the debt and we work to create cash flow from that debt, 10%. Okay, then we take the rest of it and we move it into assets that beat inflation. That's all we're doing. So whether you're a seasoned investor or you're a beginner, I just wanted to explain and demystify this, that it's not about catching the next best crypto, the next best stock. It's about building a system, because that's how money actually works. What this represents, and I'll do some other videos around this represents what's called maturity, okay? Money needs a container, it needs a system, it needs discipline, it needs structure. All that happens is money moves from the undisciplined to the disciplined. So I hope that helps a little bit so you can kind of see it. because we get that a lot in our education calls. We have an education academy I'll bring up in just a moment. There's people like, man, well, JV, you're a multimillionaire now. I wasn't. This is how I compounded it. That's how I did it. When I realized my income was debt, I worked to create cash flow, and now my cash flow just continues to increase. So two things are happening for me. Okay, my cash flow every single month gets bigger and bigger. So my cash flow keeps increasing. Okay, my assets, they go up and down. Okay, so they go like this. When they're going up, I pull profits and I buy more cash flow. Does that make sense? So it just keeps getting bigger and bigger and bigger. Okay, so I want to share with you guys this CAPL+DR that you can see right here. This is a system that we are actually trademark pending right now. We're waiting just to get our number. I invented CAPL+DR. So if you're interested at all in learning, we're educators. We do not invest people's money. We're trying to empower you guys to understand how inflation works, how to create cash flow, what type of assets do we get into, and we teach you a system. So if you're interested at all, there should be a link down below this video or in my social media platform. Click the link in my bio. You'll see the CAPL+DR tagline, and you can interview with our team to see if you're a good fit for our education program. What we're going to do is demystify all this. It's not that difficult, guys. And so in the next couple of videos, I'm really going to teach you how money actually works, because if you don't know the mechanisms of money, you will never get out of the trap. So I hope this helps. Leave a comment down below. Let us know how we did. Warriors, rise! Get your shit together. Let's go.